Right then, folks, just another update from us before we head into US trading today on Thursday, the 22nd of June. And yeah, Bank of England. We've had the Bank of England out over the course of this morning, midday today. Also had the SNB, Swiss National Bank, and the Norges Bank, the Bank of Norway. And we'll speak about the three of them. We'll have a quick look at the three of them. But mainly we're going to focus on on the Bank of England. Norges Bank is surprise interest rate hike, 50 basis points versus a consensus of 25. So surprise interest rate hike when it comes to them, and the Norwegian krone has surged off the back of that. We'll have a quick look at the chart once we get around to it in a minute. Swiss National Bank, the SNB, did come out and hike interest rates and say that there is scope for further measures to be taken if needs be, but with inflation at 2.2% in terms of the year-over-year figure in that country, I don't think that is calls for further interest rate hikes. I think inflation is not that high in that country. It's not as much of a problem as it is when we look a little bit closer to home in the United Kingdom, where inflation is a massive problem, and that has been alluded to with the goings on this afternoon. A surprise, well, not too much of a surprise, a 50 basis point hike. Surprise in terms of market consensus, but it was 50-50, could go either way. It was 50% priced in, and what we got was the 50 basis point hike over the top of the 25% that markets had anticipated. And we were looking at that this morning. If you watched a couple of videos this morning, we did predict that. We're hoping for a spike higher on sterling and then sell back into it, which is exactly what has ended up happening. And yeah, price kind of chops around where it was pre-release, so higher and then lower and then back in the middle. But whatever way you try and spin it, 50 basis points takes the interest rate to 5%, and the central bank have alluded to the fact that interest rates could get up to 6%, and 6% should in theory send the UK economy into recession. So not a good day in terms of the UK, and not a good situation in terms of the UK. But that is the situation that the central bank are in, and they said that they will do whatever it takes to get inflation under control. What that involves does that involve hiking the economy into recession? That seems to be the way that we are headed at the moment, as inflation is proving more persistent in the UK than in relation to other economies. And they have suggested that inflation expectations in the US and in the Eurozone are not what they are in the UK. Inflation expectations are higher in the UK. They still maintain the fact that inflation will come down, but how do they come down? They said they had to hike interest rates by 50 basis points, or else there will be collateral damage somewhere later on down the line. Now, if we look across the grid and have a look at the grid before we jump across to the calendar, much of the same as this morning. Stock index is still lower. A little bit of a bounce back across the kind of US indices and the DAX namely, but apart from that, we're pretty negative across the board in terms of equity futures, pretty negative across the board in terms of commodities and bonds. Yields higher, a bit more of a green picture in terms of the yields over the course of today than or as opposed to what it was yesterday, but all largely flat, really, to be honest with you, when it comes to bonds. UK bonds more in focus, which we'll speak about now in a minute. But we can see the US dollar pretty strong across the board. Markets kind of livening up slightly to the hawkish remarks from the Fed Chair Jerome Powell over the course of yesterday. He's due to speak again this afternoon. We'll await any further updates as it comes around to it later on this afternoon. But the Australian dollar down with stock indexes. Rest of the currencies, not a lot of clear direction across the board in currencies today. The Canadian dollar higher, Aussie dollar lower, but even then, like Aussie CAD is only down by 0.37%, so not exactly massive price movements across the world of FX today. Markets, the Bank of England kind of take center stage, or took center stage today, and they've come out hawkish, but hawkish would normally send the currency higher, but the fact that hawkish will probably result in a recession in the UK, that certainly is not positive for any UK related assets. We'll jump across to the charts, and as you can see the reaction to this sterling, it made me look at cable to begin with. You can see the spike higher, sold straight back into, and now we've met at the middle. Cable is making an attempt at breaking through these lows. I have it sterling euro here, but obviously it's euro sterling, but this is through the lows, or making an attempt through the lows, which would be euro sterling through the highs. Now, apart from that, sterling CAD's making an attempt lower. The rest of these kind of holding firm at the moment, but FTSE pushing higher, which is a bit strange, I'm not going to lie to you. Hiking of interest rates to send the economy into recession is not something the stock index should be rallying off, but there we go. There it is. Maybe it was priced into the price, but yeah, I can't really work that one out as of now, if I'm being perfectly honest with you. We'll give it a day or two to sort itself out, give it to the end of the week. But yeah, that popping higher off the back of this announcement today. It's certainly not dovish to send the FTSE higher, but yeah, I mean, I'm not so sure I agree with that as a move, but anyway, not a lot you can do. That is what is happening, and obviously we'll have to deal with that. But in terms of the interest rate decision, up 50 basis points, as you can see here, consensus 4.75. But I think what was of note is the members that voted for a hike, all 7 voted for a 50 basis point hike, so they were unanimous in that decision. And there is a lot, they did suggest that interest rates could go as high as 6%, and that again is negative for UK related assets if that happens, as that surely sends the economy into a recession. So we'll have to see how that plays out over the coming weeks and months. We'll have to keep an eye on the data, see what the data says, but obviously inflation was yesterday out of the UK, so we've got a little bit to go before we see some more inflation prints from the United Kingdom. In terms of other markets across the board, you can see the US dollar market's not really buying the Fed hawkish speak there, and they're still placing bets on the fact that the Fed are approaching the end of their hiking cycle and they're going to stop soon. That is where markets are looking at the moment. You've got potential for the Australian dollar, Canadian dollar, the RBA and the BOC to continue hiking, the ECB likely to continue hiking, certainly in the near term the Bank of England likely to continue hiking. So I think markets are probably reading into that and thinking that there are other central banks that are going to hike more from here on out than the Fed, which has to be the reason, in my opinion, as to why there is no US dollar strength off the back of last week's Fed and into today, or into yesterday. So we'll see what Jerome Powell says later on. Has he seen price movement off the back of his speech yesterday, where the US dollar did cruise lower? Has he seen that and thought to himself, nah, maybe that's not what should be happening? But anyways, we'll cross that bridge when it comes to it. But stock indexes continue lower across the board. The S&P lower, Dow Jones, Nasdaq lower. That is the expected reaction to a hawkish Fed. Not quite. US dollar continuing to trend lower. You can see the DAX trending lower, the FTSE trending lower, the Nikkei pushing lower over the course of today, and just negativity all around remains in financial markets. Look at bonds. I think bonds are an interesting one. UK bond yields, the spread between 2 years, the 2s and 10s, hit the biggest inversion since 2010. So what that signals then, a yield curve inversion, signals that short-term interest rates higher than long-term interest rates, which does then signal a recession, and that's what we've seen today. Bond yields moving lower off the back of this would not be the expected reaction to a hawkish central bank, but an inverted yield curve is what we'd expect to see when looking at a recession, and that, if that points towards a recession, largest likelihood of a recession since 2010, well then that is probably what markets think. So in terms of what that means going forward, it means, I can't imagine that's positive for UK related assets by any stretch of the imagination going forward. Off the back of interest rates, the currency could strengthen a little bit, but that's surely sterling and FTSE are a sell. Surely in the short to medium term, you have to imagine that is not good for US or UK related assets. In terms of the afternoon, you got Jerome Powell's speech out later on this afternoon. Apart from that, you got a couple of other speeches, some home sales figures, some housing figures out of the US. But I think Jerome Powell's testimony will take center stage as we head into the US trading session.